Okay. Welcome, everyone. Good to have you here. Another day, another live stream. So in today's live stream, we're going to cover Elliott waves, focusing on the local range that has been forming on Bitcoin since the all-time high. I want to share some updated thoughts compared to the video yesterday. Price moved down to support at 107. Quite nice. And so far has a bit of a bounce, which is, of course, good to see as well. We went up from support about 162%, not bad. Just hovering below the complete range point of control here at a 108.9. So we're going to cover some Elliott wave scenarios in the beginning of the stream, ending, of course, with my probabilities or the conclusion, so to speak. You can see the folders here on the right side. I will cover different stuff. One thing I just want to get out of the way immediately is that it is very difficult to end a corrective structure at this particular low. So if you want to end a corrective structure over here, very low probabilities, and you will soon see why that is the case. So probabilities are higher. You're going to continue correcting slash still take out the double bottom that price now has created, which happens in some of my scenarios today. Other than that, after the Elliott wave analysis, we'll jump into chatting and Q&A. Welcome, everyone. You are on screen, but I pop you in my on my second screen for the time being. Good to have all of you here. Mods as well. Jeroen, Mark, maybe a Band-Aid. What's up, guys? So I will come back to chat after the analysis. Make sure the analysis gets out of the way, which is, of course, something most people like to see. And then afterwards, I answer questions and all the good stuff. We're probably going to be online for an hour, as is usually the case. So let's get this started. Clean up my chart. And I will also clean up the targets here. Before I start, I actually want to show you something. And I have to go to the previous bull market to show it. Oops, we go back. And I will open one of my folders, that one. So I am working on a Elliott wave count for the current bull market. But before I wanted to analyze the current bull market, I basically analyzed the previous bull market from 3K to the tippy top, 69, in detail, focusing on the impulses. Now, the last one is very obvious, and I didn't really feel after spending a lot of time counting everything in detail here. Doing this last little stretch was like, well, you know, it's quite obvious. So I was like, whatever. But yeah, I will eventually make a video going through the previous bull market and then also at, you know, looking at the current bull market and how they compare and some lessons that we can take from the previous one and implement in the current one. So I just wanted to show that before we start. I actually did that yesterday morning. It took a couple of hours to figure that one out. But you know, that's for another day. It's not for today's live stream. And I analyzed the previous bull market on a 4-hour time frame. Okay, let's start. So you've seen the thumbnail. Let's start with a zigzag. Actually, two zigzags, but different wave Bs. Starting with what you see here on my chart. Right, so this is a simple zigzag, a 5, a 3, and a 5, but wave B is longer. And inside wave B, we then have a complex structure, which is ABC zigzag in W, zigzag structure in X. Also keep an eye on the volume, ended on a high amount of volume here, which is something you do like to see, like this final stretch. Difficult to count this as an impulse, right? Because preferably you would have had a 1, 2, 1, 2, and then a 3, 4, 5, 4, 5. We never got the extra 4, 5, right? So a multi 1, 2, ending with a double 4, 5, counting this as an impulse, tricky. Not really the highest probabilities at the moment, unless you want to count this somehow as a diagonal, as your 1, short little 2, 3, 4, 5. Couple of things that we need to add here is generally after a diagonal, you expect a deep retracement, most often a zigzag. This would be a very shallow retracement, not even touching the 382. Very uncommon for a wave 2 after a diagonal, right? It's even written in the book of Elliott wave principle as well. Right? And also after a diagonal, you would expect a very big wave 3, which is not the case over here. So very unlikely. you're looking at that probability is higher. This is corrective, not impulsive, which then is labeled with wave X. And then we have wave Y, either a flat or a triangle. And the reason why flat/triangle is written there and not zigzag is because wave X retraced very deep compared to wave W. It retraced deeper than the 0.7 Fibonacci taken from the start to the end of W, which significantly lowers probabilities for a double zigzag to the upside. Instead, you got to think about a wave Y being a flat or a triangle. Initially, a flat will always have the highest probabilities compared to a triangle, right, which is the yellow line, A, B, swipe the lows, C towards the upside. Alternatively, your triangle, but you just need more data. So eventually you need a wave A, B, C, D, E. By the way, with regards to the polylines that you see on my chart, by no means does this high on the polyline need to be your wave A, right? Of course, your wave A can be longer as long as it's a three-wave structure. It's not completely positioned randomly. We do have some resistance there, right? So I do tend to try and position my polylines against resistance levels. But you can see this is not the only area of resistance we have towards the upside. Here we have a point of control below. So that is where I put the yellow pivot, right? So you can see there's a bit of a relationship between where I put the pivots, but by no means does it need to turn around there. But it might, right? It might. And then after your B, bloop, there you go, impulse in a wave C. Cool. That is your first zigzag, second zigzag. So as you can see, we're looking at zigzags, and basically, at least with these two scenarios, and basically the conclusion of both those scenarios is you still expect a wave C to the downside in both of these cases, right? So in other words, lower prices. Got a question earlier today in the comment section with someone asking like, do you see 90 to 95K being touched if we get a bigger correction to the downside? At the moment, not yet. Right? At the moment, not yet. I would currently think more about the lower 100s, right? In other words, this previous range. I would expect that one to hold if we would get a first zigzag down ABC, touch the support. Point of control of this range is at about 103.5. Let me open this one. 103.5K. I would expect price to hold this area when touching it for the first time, create a reaction, and then if you get a double zigzag, WXY, then yeah, you could move into the like 90s, but 90 to 95, right? That would be your next range basically, which at the moment for what we have over here would be a little bit too deep. You would need an impulse down if you want to get that deep, basically like a 1, then a 2, and then get a 3, 4, 5, right? An impulse could get you down there. At the moment, not really looking at impulses yet. That would, of course, be your most bearish scenario, though. So yeah, ABC, this is a different B. In this case, we're looking at flats. So wave B is either a running flat or you get an expanded flat, regular flat or an expanded flat on my chart. So the running flat would be A, B already in, and then you're working on 1, 2, 1, 2, 3, 4, 5, 4, 5. You do like this move up to, of course, continue and extend, right? You actually want locally to then start a wave 3 to the upside. Currently, we can count a 5 waver. This could be counted as a diagonal, and a 1, 2, 3, 4, 5. Of course, close to the resistance that I had here as well. I just missed out on actually touching it, but it's an area, not always precision. We also have some news coming in now, by the way, so make sure you trade safe over here, right? But you want an impulse to the upside, and in this case, 1, 2, 1, 2, 3. For a wave C, generally wave Cs are very quick and fast moves. They don't take a lot of time. So that's the blue line, and then you have your double zigzag, which is green, which would be zigzag. That's your W, X, zigzag. That's your Y. Wave Y finishes B, right? And then preferably your most common target for B gets touched, right, to the downside, and then you see a move towards the upside. That is going to be your wave C. Expanded flat would take out the high of A. Running flat would stop somewhere in the middle, and then you continue down to get your final leg in C, right? So in both of these cases, as I guess complex as it looks for people that are not engaged with Elliott waves, in other words, continue the range. So here you continue the range, and here you continue the range and then move to the downside afterwards. So those are the zigzags. I will go into probabilities in a second, right? So here we have the WXY. Now, generally, when you start counting ranges, you want to start with ABCs versus WXYs due to probabilities. And in the end, the WXY always starts with an ABC anyway, because wave W can only be a zigzag or a flat. Now, in this case, your W is a zigzag, X is a zigzag. You're looking for a wave Y, triangle or flat, right? Flat is yellow, triangle is blue. Let me turn this off. So you would have your A, you look for B, C, D, E, continue up. Alternatively, A, B, C. Once again here, a flat has higher probabilities than a triangle because for a triangle, there's not enough data. That's how the probabilities work. Also here, then, you would, of course, look for price to preferably take out this high, right? Because an expanded flat is most common, right? A, B, take out the high and then move down in a C or regular flat. And then take the double bottom would be ideal to grab the liquidity. But yeah, this again continues the range, I suppose, where at the moment the triangle does not have the highest probabilities. And most commonly in flats, your C takes out your A. So in a way, in this scenario, at the moment with the info that we have currently, you would still expect the lows to be taken after the range is going to continue for a little bit. So here, at the moment, probability is high. You would take those lows with a C and a Y because triangle is too early. In a zigzag, in both blue lines, you preferably take out that low. And same over here with the zigzag with internal B being a WXY. Right? So you would expect lower prices. Now, this is a scenario we had on the chart yesterday. I already said I'm not too happy counting this as a multi 1-2. And it got invalidated because price now overlaps 1 and 4 over here. You really wanted another 4 and 5, but price overlaps with 1, which is not allowed in an impulse. That's literally the only thing I wanted to say. And now it's removed from my folders. And then we have some alternatives. These are not really relevant at the moment. I just wanted to share them because it's fun. So A, B, C, D, E, triangle after E, continue. Not enough data at the moment. Wave D has to be a zigzag family structure, right? So wave A, simple, B, simple zigzag, right? A, B, C, and that in this particular case. A, B, C, yeah, very much this last leg, 1, 2, 3, 4, 5. So you would have like an A, B, C in here. I was yesterday thinking, could I get a WXY in here? But no, I prefer like ABC. Wave C does have a tendency in a triangle to be complex, but looks more better as a C here to the downside at the moment. Then you have wave D, either simple or double zigzag. Wave D after wave C gets the highest probability. So in a triangle, if one of the waves is not a simple zigzag, it's generally wave C. If not C, then D. If not D, then B. Probabilities go down for each. If not B, then A or E, but that's very rare. After D, go down for E, continue. Also here, not the highest probabilities because it's too early. We need to wait for a D and then go down for E, etc. Right? But it would continue the range. And then you have your diagonal, not the highest probabilities, way too early. You have your A, B, 1, 2, 3, 4, 5 in C, finish 5 on top of support, and up you go. It's not the highest probabilities because also here for a diagonal, you want to wait for wave 4 at least to be in and move down in your 5. First of all, you need to take this low, move back up in a zigzag family structure because wave 2 and 4 have to be zigzag family structures. And after wave 4, you go back down again. This is also an ending diagonal, which means that wave 1, wave 3, and wave 5 all have to be zigzag family structures. They cannot be impulses. So it's too early, but it's fun to share because we love Elliott waves on the channel. So at the moment, with regards to the probabilities, I would favor the zigzags for now. So the ABCs with then an extended B. I don't really care about if it's a WXY internally or you get the flat structure internally. In both cases, you would continue the range for a little bit longer. I would not mind at all to grab this high and actually touch the resistance we have here, which we just missed out on touching when price made this high. Because to the upside, we have a daily naked point of control at 110.9, which is definitely nice, but we actually missed out on touching it. happens. So it would be interesting. And depending on the reaction over here, I would definitely be interested in shorting at that area. But as always, I generally need a couple of hours after a level is hit before I really get interested in trading of a potential level. But you know, it's interesting nonetheless. So here you would continue the range sideways. Of course, green takes the lows, then you move up, and also here you basically continue the range, and probabilities are higher to still take out these lows at a later stage. The only scenario where you do not take out the lows would be this triangle in a WX triangle Y, but it's too early. Or this wave Y is a running flat AB. You get a C here, right? And then you move up. But a running flat is generally the rarest flat unless you have a strong trend, right? In a strong trend, you tend to get running flats because you don't take the lows, right? A, B, C, running flat. Some people like to count this as an ABC, which would be a running flat. I don't know. I look more at a WXY here. And over here, A, B, C running flat. So once you start a bigger trend, it's funny, of course, because I say like, you know, running flats are the rarest flat structure, which is true based on the Elliott Wave principle, the book. It's literally written there. But in a very strong trend, you tend to see them because you don't take the lows and only create higher highs and people miss out. So yeah, that is currently the status. So expecting a continuation of the range in general at the moment, still expecting these lows to be taken. Looking at the zigzags first, right? With a bigger wave B. And yeah, and that's it. That's the current status, I suppose. And if anything changes, you'll be the first to know, right? If correction ends and we move up, well, you know, we have to go sideways for a longer period of time or create a running flat here. But at the moment, it's low probabilities that this over here is the end of a corrective structure. You're definitely looking at an extension. This is also too early. You know, it doesn't really matter too much. This is also too early. So yeah, that's currently what's going on. Now, from a trading perspective, I am currently positioned long. So we had our support box over here. We moved towards the upside. I could identify a diagonal in there, but I was waiting for the move down. Besides, I was asleep. So, you know, I don't care about the charts when I sleep. Sleep always has a priority. And then I woke up and this move to the downside looked very corrective. Let me explain what I mean. So first of all, we ended it on a high amount of volume over here. Second, this looked very much like a WXY on a low time frame. WX and then your wave Y, ending on a high amount of volume. And then slowly grinding towards the upside, supported, by the way, by bullish is CVD divergences as well. Let me show that here. So CVD, 3-minute time frame. The small CVDs are not shown, only the bigger ones here. So this one, bullish CVD, but as price was moving up here, if I zoom in, you'll see it. You can see here as well. Yeah, the green line just shows there was a CVD. You can even just see it on the chart. High, low price, lower, low on yellow. And then as price was moving up, you know, we kept continuing here once again. High, low in price, lower, low CVD. So it was interesting to join. And that is the reason why that is currently a position that I am still in. And of course, we also touch support, so it's more interesting to look for longs than shorts while you're at support anyway. But that's what I mean. The moment it gets touched, I don't really immediately engage. You know, I need time. Now, something else I like to show you guys as well is something I put in silver yesterday. Let me actually show it here. Open the link. So this was the move to the downside yesterday into support. And this is, once again, a 3-minute time frame. But the move was, you know, we were coming down. Volume was increasing initially. But then you can see just by, I can't zoom in like this. But you can see here that, like, the chart is starting to curve, right? It doesn't go straight down anymore. We start to create some ranges. The ranges slowly get bigger. That's on a 3-minute. We go back to this move. because you don't always need to count in order to trade Elliott waves, right? So you get a quick move down, right? But then you can clearly see here, we start to curve, right? We start to curve. And that's what I meant with it is here as well. It's like, okay, we get a curvature, question mark, back towards the upside, right? Question mark. And then I went to bed. So, or well, that was at like 6. I didn't go to bed yet. Did I provide any update after? No, that was my last post on the day. So, so yeah, and then of course you curve. Yeah, sure, one more low, but first move up, second move up, not bad. So that is a very simple Elliott wave analysis. You don't really even need to count in order to use Elliott wave knowledge to your advantage. And I tend to repeat this sometimes. But if you would go to the Elliott Wave Beginner's Guide, this is LINKTREE, it's in the description. You click on here. The first video is where I explain this. You can have no knowledge about Elliott waves at all. You don't need any knowledge. You only need what I say in this video. You don't need to know the letters, right? You don't need to know the numbers and all that stuff. Only watch video 1 and you'll be able to at least trade Elliott waves without actually knowing you probably use Elliott wave knowledge to your advantage. And this was one of those type of like opportunities where we go quickly down, but we start to slow down, we start to curve, ranges get bigger. And in that video, I explain more about it. So yeah, that's currently the analysis, I suppose. And we get into chatting and Q&A. So we've been live now for 25 minutes. Oh, we're doing good. Doing good. We're good on time. So let me just quickly write here in the chat. Let me put this here. So Elliott wave analysis. I guess we started quite immediately at like 6 minutes maybe or something. Now chatting and a Q&A. Jackson, watch the beginner playlist. I'm glad, Jackson. Happy to see it helps. Also, I sometimes see, I have my eyes in Discord and Telegram, but I also see people sharing stuff from the Elliott Wave Beginner Guide playlist on the channel in Discord when people have questions, which is really cool to see. So, yeah, thanks, guys, for doing that. But Jackson, still expanding diagonals. Okay. You're doing good. A few videos to go. You'll be an Elliott Wave Pro, yo. Cheers, Jackson. Also, welcome to the live stream. I think that might be your first message here. To everyone here, of course, welcome. I'll try to go to the questions down, but just skimming here for any questions. Bralock, you are not yet in Discord. That's what we noticed. So if Jeroen, is Bralock still here? Because we checked it out based on your previous message, because I was like, wait, what's happening? So before you enter a membership, it says like, what you get, right? And then in Discord or in Telegram, XYZ. But you need to join Discord and Telegram. And that didn't happen yet. So, and you need to fill in the form. Did anyone link it? If you fill in the form with your data, if Jeroen is here or maybe a Band-Aid, if someone can please share the link. But then you fill in your stuff, and then we will reach out to you, send you an email. If you are already in Discord, we will manage you, but you're not. So we need you to get in there, and then you have access to everything. Can you show the move up from 15 May to 22nd of May? The count is a bit confusing. 15th of May. So I would try to also recommend to avoid going too much in detail in a trending environment. So we have a range here. The question is it corrective or impulsive? If you go to my video, I don't know, I think I posted it on, I think Friday. Must have been Friday, because that's where I entered my position based on the video. So if you watch the video that I posted on Friday, right, you will see how I analyze this range and why the probabilities were higher for price to take the high. And that's basically the only thing you need to know when you analyze a range. Like, is it corrective or impulsive? In other words, is this range corrective? If yes, you look for price to move up and take the high. So you're going to prioritize long positions, and then depending on support and resistances in the range or other tools, you can find entries. No? If the move or if the range is impulsive, meaning 5 wave 3 and you expect 5 to the downside, right? You might want to be very careful, right? Because you could get into a wave 3 to the downside and a bigger impulse. So then you have to wait, right? It takes more patience. Of course, this move down can be counted as an impulse in a flat. A wick like this is generally flat material. But then what mainly mattered here is time. Because if this is a wave 1 or a wave A, right, you want to have a 3-wave move up in 2 or B. Okay? And you want this 2 or B to finish way before a 6-5 pip time, right? So if you take this tool here, which is the trend-based FIB time tool, okay? And we take it from the start to the end of this move down, and we double-click at the lower pivot, and then we toggle on these. Now, let me clean this up a little bit and remove that as well, that as well. So here you can see the different colors. Let me just change the colors for clarity. So 1, 2, 3, 4, 5, 6, right? If we had an impulsive move down, potential impulsive bigger move down, this should have been your 2B, because this range over here, or this top, was made before the 3 fib time, which is fine for a 2 or a B, right? But then price moved down, 3-wave structure, came back up. The moment you took out this high here, after a, mind you, 6 fib time, that is where the probabilities change to this range being higher probability corrective, and look for the high to be taken. Which was then also the reason why I personally took a long on Friday with my full take profit at this high. And that's also because this high was made during the weekend, and I don't expect breakouts during the weekend generally. So I don't feel like holding when the probabilities play out. So that is like, so it's interesting, right? So I haven't really counted anything in detail per se, but it's time knowledge here. So yeah, sure, we can count a 5-waver. You can just see, look at the chart, and you can see, well, it looks 3-wave, not 5-wave. Now in detail, 15, what was the question? 15 to what? I don't know if I really want to, oh wait. Yeah, so in a little bit more detail, there's 2 ways that you can approach this range. So first of all, you have a flat here, ABC, right? That's your A. Then after your wave A, loop, you get a double zigzag to the upside. W, you get your X, and then your wave Y, right? A little bit bigger, of course. Plop. And then this is your B, and then you get your C. Alternatively, I actually discussed this with someone recently. You have a WXY here, and that's your A. Then you get your ABC, that's your B, and then your C down. So those are basically like your 2 options. Alternative, maybe this is a flat by itself. Then you have to go into WXY. And then your wave X is a double zigzag, WXY. You have a flat in W and a flat in Y, which is possible. So those would be options, but the detail is not necessary for the trading. Try it, keep it simple, right? The KISS shortcut, right? I won't say the last word, but keep it simple. No? That's very important. Elliott Waves is already very tricky as it is. So zoom out and wait for the chart to show you what it wants to do. I see a lot of people loving the low time frame counting, which is great if it's maybe part of your strategy. Generally, though, if you are learning Elliott Waves, I would recommend to stay around on at least 50-minute or higher, but generally like a 1-hour time frame is good, like, or a 4-hour, like where price is not moving too quick, and you can analyze, check. You need more patience, but later you can go down, Charts and stuff. What's up? Welcome back. I could see an ending diagonal in C, now unfolding with wave 1. Yeah, but it's too early to talk about diagonals here. if you want to count all of this, at least still like a diagonal. The initial move up here can be counted as a diagonal. Yeah. But I wouldn't, at the moment, count all of this as a wave 1 in a new bigger diagonal. Now work on wave 2. Yeah, answers the question. Oh, do you keep the end box? Wait, what was it? No. Once a daily naked point of control is hit, I remove it. So here, for example, I had my box with a weekly and a daily naked point of control, right? Box is touched. Levels are not part of my folders anymore. I only keep the box on the chart. And the moment a box is hit, I turn it white. So untouched boxes are always blue. The touched ones are white. I also removed the box that we had here, right? We had a big white box here because, of course, this was touched, respected, price moved up. And I don't want to clutter the chart because I had another box in like the same area, so to speak. Yeah, and they have a white box on top of a white box. And it doesn't really work. So, yeah. And then over here, this box is still blue. You can't... Yeah, I mean, you can barely see it, but there's still a blue box here because price just missed out on touching the box. So, yeah. Oh. Elia, what do you look for after a big correction to your capital in the past to see big bull target and green star trading? Will that change? I mean, so first of all, Green Star Trading, I love his videos. He's very cutthroat, which I really respect. He doesn't care. He does his thing. Boom, done. Take it or leave it. I love that attitude that, like, it's just no nonsense. I see this, I do this, that's it. So the multi-1-2, of course, there's no invalidation for the multi-1-2 and the very, very big move towards the upside. I'm not really looking at all of the previous ranges on the higher time frame. Range at 30K, range at 70K to 49K to be 1-2s, all of them. I would, like, on a higher time frame, I think we're going to upload a short about this quite soon. I don't really... oh, this one is still on. Oops, there we go. So when I analyze the chart, I want to stay quote-unquote down to earth, right? This is where we are at the moment. That's what I analyze. And I don't want to be too bullish nor too bearish. I'm just like the neutral, right? I also don't care if price goes to 500K or it goes back to 10K. I couldn't care any less. I'm not married to the asset. I take my money out of the market and then I leave because I close my position and I wait for my next setup. I don't care about the price of the asset. My personal trading window doesn't even have a price here. You can go right mouse click, settings. You can go to canvas and then where is it? Skills here. And then you just do this. I think it was this one, right? Yeah, ta-da, gone, right? Simply lovely. You can also remove, I believe, the price of, you can only have time here somewhere in your settings. So yeah. Now, with regards to multi-1-2, I mean, I'm not really looking at like 1-2, 1-2, 1-2 and, of a lower degree every time here. I would prefer to think about 5s. I didn't yet analyze the current bull market again. I have done so with the previous one in detail to see what lessons can be learned. Next up is this one. But of course, initially, you're just 1, 2, 3, 4, 5ing this. And then after 5, we expected a retracement. You got to wait on the retracement. Impulsive or corrective? Was clearly corrective. Okay, price moves back up, takes out the high. So you can't end this with a 5. So now you're going to think, okay, can we get an extended 5? 1, 2, 3, 4, 5, right? In other words, 1, 2, 3, 4, 1, 2, and then eventually get a bigger 5 to the upside. That's an option. Multi-1-2. Right, so you have your 1, 2, 1, 2, 3, 4, 5, 4, 5. That's arguably your most bearish option. Maybe even a triple 1-2. 1, 2, 1, 2, 1, 2. Bybit took out this low, but who cares about Bybit? So then, joke. So then we have over here another 2, and then you move up, and then you go 4, 5, 4, 5, 4, 5. You make 2 more bigger all-time highs, but you're starting to curve, right? So just as a, where is it? The previous bull market... 8, open my folder. So you can get something like this here where you're going to finish 4 5s of a higher degree. 3, 4, 5. Ending another 3, 4, and then 5, right? Ending another 3, then you get quote unquote bear market, which ends another 4 here, up for the final leg in 5. No? So that's also something I'm considering, because when I look at the start of the previous bull market as well, then at the beginning you have multiple 1-2s. Let me open this here. Nope. So this is the 8-hour time frame. I analyzed it on like 4/8 hour. I only counted impulses, didn't bother counting the corrective structures. So here you can see how the multi 1-2 begins. And this is, by the way, without counting this big 1-2, okay? So okay. So then we have our first impulse up. That's your 1, that's your 2. This is your first 1-2. Second 1-2, okay? Then, up here, then you have 1-2, 1-2, 1-2. However, that's a sub-degree, right? 3, 4, 5, 4, 5, 4, 5. Get another one. You see that this range here, right, is quite big. It's quite big. If this would be 1-2, 1-2, boom, 3, you don't want this, right? You just want to go up straight. So naturally, there's higher probability to be another 2, shallow, it's trending, that's perfectly okay. Let me actually remove that, right? It's the only fib I had in the whole bull market, by the way. So this is then your third 1-2, and this is the first 1-2 that is not overlapping with the previous one. So quite clearly here, we have overlap between the 1-2s. This is the first one that doesn't. And then we get into the 4-5s, right? This is where your 4-5, 4-5, that's where your 4-5s basically start, right? But I was like, well, when looking at 1-2s, and this is something I tend to say often on the channel as well, is when you work on 1-2s, it is common to see 1-2s overlapping. Of course, you can have a 1-2 that does not overlap. That happens, right? That absolutely happens. But it is common to see 1-2s overlap. Like, for example, over here, I can go to over here. This is most recent as well, right? You have your 1-2s overlapping. You get your 3, you get your 4-5s, right? Typical impulsive structure. No? Very, very easy to identify. Here's the same thing, right? Overlap between the 1-2s. No? So when you look at the current bull market, and you'll be like, okay, 1-2, 1-2, 1-2. I'm like, well, I miss the overlap naturally, right? Like, if this is just a single 1-2 now, 1-2, 1-2, 1-2, then where's the overlap? I kind of miss it. Yeah. It's not an invalidation, but I miss the overlap. So naturally, therefore, I would prefer to go back and count this as then a multi 1-2 structure because of the overlap that we have over here, right? Double zigzag down over here, right? You have your 1, 2, 3, 4, 5. Naturally, that's then your first. That's your second. Get another one. 1. Maybe 2 ends here. Maybe that's your 2. And this is another 1-2 with a very deep retracement. We don't care about the wick on some exchanges like Bybit, right? On my chart, it didn't take out this low. Yeah, you could have a triple 1-2 here. Then you get your 3 up, 4, 5, 4, 5, 4, 5, right? If you want to get into multiple 1-2s, at least at the beginning. And then alternatively, of course, you have your 1, 2, 3, 4, and people have the 1, 2, 3, 4, 5 extended fifth wave. An extended wave gets higher probabilities on time frames like weekly and higher. Arguably, this is a weekly time frame because of market participation. More people enter the market because price has moved up so much. The asset gets in the news and this and that. The more people start to learn about it, so there's higher market participation, increasing the potential for your extended wave 5s, which is your blow off top type of move, right? Which you can also see in previous bull markets. So this was your initial wave 1, but this is your wave 5, right? This is your like blow off top, wave 5 here. But mind you, of course, that your wave 3 is still by far the biggest in this particular case. This wasn't really like blow off top, you gotta say, actually. But here you had quite a long 5. Well, neither this one here. So yeah, I guess those are just some of my thoughts. I would prefer to look into multi 1-2s first before I go into extended 5s. But both of them would be worth to keep in mind At the moment, I'm not really looking at a flat here, which would be your bearish scenario. Yeah, a lot of chatting, but I guess it answers the question. Fibonacci time in Elliott Waves. Welcome, Tino. In the playlist, Elliott Wave Beginner's Guide, this one here, it's on the channel. It's incredibly difficult to find any info on using Fib time or time in general. They talk about, in the book, they talk about ratio analysis. But, you know, it basically means you want structures of the same degree to be in line with one another, and not one is much larger than the other. That's basically what it means. And I just translated that in using Fib time and build experience with Fib time. So that's how I do it. But it's a great tool. It's part of Tradingview. And in the beginner guide videos, I talk about it. Well, not, yeah, how I pull it and some common areas. I don't really use MA and MACD. So yeah, MACD would be similar to RSI. Wave 5 should show exhaustion compared to wave 3. Moving average, I don't know. Actually, I don't actually know if... I don't think the moving average is like a common indicator for Elliott waves. Okay. And then down we go. Is there a scenario where the correction is done? At the moment, no. And you could arguably do this. I always recommend this as well if you're new. Put this on the chart: zigzags, flats, triangles, WXYs, and then you just tick them off one by one. We can do this very quick. Can this be a finished zigzag? A, B, C? No, C didn't take the low. By the way, it is most common, of course. C takes the low. It's not a must, but it's incredibly rare. Like if you would go to jump into the theory, right? Like, yeah, I mean, you just want C's to take the low. So A, B, C, no. Very low probabilities, also not great as a 5-waver. Multi-zigzag, WXY, want to take the low. Nope, triple zigzag, irrelevant. Flat, A, B, C. B didn't go high enough. This is too low. Doesn't work. C needs to be an impulse. Doesn't look great as an impulse anyway. Triangles, A, B, C, D, E, not yet finished. WXYs would then be WXY. W zigzag, Y zigzag, right? Or you have to count this as W, and then this is your X, and this is your Y. The issue you now create, because now Y is a flat, is that X is an impulse, right? So then what we have to do is you have to put W here, X here, and then Y here. So now this has to be a zigzag, can't be a double zigzag. This has to be like A, B, C. This is a flat ABC, okay, that can work in X. And then this has to be A, B, C, and Y. This move up, however, here counts better as an impulse. 1, 2, 3, 4, 5, compared to this being a 3-wave corrective structure. Lower probabilities for that. And also, if this is a flat, this has to be a 5-waver. And as shown earlier, low probabilities, this counts as a nice 5 because you want to have 1, 2, 1, 2, 3, 4, 5, 4. We never got the other 4, 5. So in other words, probabilities at the moment low that a corrective structure here is finished as per the analysis. Jeroen is your brother? No, he is my, freelance employee. And he's been part of the team since almost a year now, by the way. And does incredible work. Very smart guy. Really good in what he does. And lives in the Netherlands. So, yeah, very, very happy. Where were we? Okay. Are we still looking for wave 5? I mean, in the previous video, I mentioned that, first I said in this range, top is near, and the previous video is top in, question mark. And at the moment, we are working on a correction, which is unlikely finished. So yeah, for now, I'm looking at a corrective structure. If you do get one more push up, yeah, I'd be looking for 5, but 5 might be in as well. And you start a bigger correction as per that video, which was reject. Why does it do this with, what's the link we use? Bitly, I think. Which one was it? Oh yeah, here, this one, why the top might be in. Yeah. Up. EK, so the probabilities are time frame dependent, right? So your probabilities on the 4 hour are only 4 hour. You don't use the 1 hour for the 4 hour, right? If you separately analyze them. So you can trade the 1 hour probabilities, keeping in mind the 4 hour probabilities. So if you would jump in a long, even though the 4 hour time frame, higher probability, so as an example, 4 hour time frame, higher probabilities to go down, 1 hour time frame, higher probabilities to get a move up, you can still trade long, but you want to manage your position accordingly, right? Accordingly. Because the move up might not go very far, or you're expecting a drop on the 4 hour, right? So you got to just manage better, manage more tight, take profits, right? If you are going short on the 1 hour and the 4 hour shows you're expecting a move down, you might be more lenient with taking profits, right? You might look for a runner, etc. So it just has an effect on how you manage your trades. The compendium is moving forward, Hexaplan as well. Compendium, I gotta, there's still stuff to do, but it's moving forward, and Hexaplan is doing good. So we're working hard now with Hexaplan on implementing the 6 steps on how on helping people to build their own trading plan. Okay, down. Here we are. In case I missed something up here, make sure to re-ask it. Does the book you recommend also teach about the Fib levels? Not a little bit. It talks about Fibonacci. It doesn't really show you what's common or rare. It just says in deep corrective structures, you expect a 6185.05. In a shallow correction, you expect a 382. It doesn't really go in detail in every structure. In that case, you can better look at my beginner guide on YouTube. Or you go to the Elliott Wave website, which is also linked in the Linktree. I made a shake just before I went live. Got to make sure to keep drinking. Went to the gym. I had a session and a half. I came home, man, almost felt like I had cramp in my shoulders. Jeez. I was struggling with the count up to the top. I would count corrective structures. Would this be a diagonal? 1, 2, 3, 4. Yeah, that's an option. It's probably an expanding diagonal in that case, but it is an option. Mm-hmm. What do you use to create the boxes? Well, basically volume levels is the main thing. Time frame horizontals, and then at times I can use like a Fib in Confluence or a volume profile. Keeping it very simple. Are you keeping an eye on open interest? I actually don't. I used to track that back in the day. So I used I collected a lot of data on CVD, right? So I collected a lot of data on CVD and on different time frames. And then I collected data on CVD together with open interest. And based on my data, using open interest together with CVD did not give me a better edge. It only makes things for me more complicated, everyone for themselves, of course. But in my case, it didn't help. And that's why I ditched it, because I want to keep my trading as simple as possible. I don't want to make things too complex, and then before I enter I don't want to check 10 different things and if they line up. So I was like, if it doesn't give me a significant improvement, and it didn't matter basically for me, the open interest at all, so I don't use it. I can see the value, of course, but basically I tracked if you get a CVD divergence, just because maybe you're inspired, you want to track data. So if you create a low, price moves up, you get a retracement. What I tracked is 4 different things. Open interest increases in the move up, increases in the move down, decreases in the move down. Open interest decreases in the move up, increases in move down, decreases in move down. Those are the only options, of course. And then I basically tracked, is there any And then, of course, it has to play out, right? Because that's what you're interested in. Was there any open interest that was better in combination with such a CVD? No, nothing was significant. How do you call it in research again? Like nothing was significant star, what they use in research. So yeah, I never use it. What's up, Legendario? Good to have you here, man. Does the market still respect the level? The moment a daily naked point of control is touched, if I have a box there, then I remove the daily naked point of control. If there's no box and just that level, I probably keep it on for at least a little bit. But then a few hours later, if price maybe moved beyond it or it reacted or something, eventually I remove it, at least remove it the next day. Yeah. So ETH. I made a video about ETH recently. No, is there so much different? So altcoin Elliott Wave analysis recently. I mean, 10 days ago. I don't really, so I don't want to go into all sorts of alts, so I'll just have a short look, not really to want to, might be a finished 5 wave on the daily. What are we looking, wait, is this? Yeah. Let me go to a higher time frame. Plop, plop, plop. Yeah, I mean, yeah, nothing changed. It's exactly the same on Ethereum. Nothing changed compared to my previous analysis. You actually did take out the high. No, yep, which is nice. Guys, uptrend, 886 touch. Now, what do I teach everyone here? Up, oh, wrong one, that one. 886, moves back in the range. Not common for price to take out that low. Plop, and back up and takes the highs. Beauty. That's exactly the way we like it. Did it go just a bit below the golden pocket? 05. Yeah. You love to see it. So yeah, I mean, wave 5s, I don't really enjoy wave 5s being big wicks. Let's see. We paused this one now. So now we have next level weekly. There's of course volume here as well. Oh, okay. Oh, we touched the value area high of the range, but yeah, nothing changed on Ethereum. So that video is as relevant as it is. I don't tend to go to the very low time frames on the alts. What's confirmation you use when corrective? ATAU impulse already done. Well, my confirmation in a way is Elliott waves, because if I can if I can identify a range to be a higher probability corrective structure, that is my confirmation to look for longs, and then I preferably enter longs on my boxes or SR levels that I have identified, just to get a bit of a either cleaner entry instead of in the middle of nowhere. But the confirmation, I suppose, would be my Elliott Wave analysis. And then I recently actually started to take relatively quick TPs, which I do enjoy. Yeah. But I guess that's kind of that answers the question, I suppose. Can you go through the waves in a WXY? You mean what it is? Because, so of course I made a video on WXY, which can be found in the playlist, beginner's guide. But very short, you have your WX wave Y. Wave W can either be a zigzag or a flat. Wave X can be any corrective structure, most commonly a zigzag. Wave Y, this is a sideways WXY, sideways, so WXY, okay? Wave Y in a sideways WXY can be a zigzag, a flat, or a triangle. But wave Y can only be a zigzag if wave W is not a zigzag. If wave W is a zigzag, wave Y can only be a flat or a triangle. If wave W is a flat, wave Y can be a zigzag. Okay? So you're only allowed one zigzag in either W or Y in a sideways WXY, where you want to see wave X retrace wave W to at least a golden pocket 0.7, 786, 886, sometimes even takes the origin. Then you have a sharp WXY, which is a structure like this, sharp WXY, where both are zigzags. It's also known as a double zigzag. Wave W has to be a zigzag. Wave X can be any corrective structure, but commonly a zigzag, and wave Y is a zigzag. It is indeed a 3-3-3 structure. Absolutely correct. So wave W is always an ABC structure, either a zigzag or a flat. Both are labeled ABC. Wave Y is always an ABC, or in a triangle, you get DE. Wave X can be anything. Wave X can internally be a WXY, for example. Pleasure, Jack. When I see Jack P, I don't know, I just have to think about Captain Jack Sparrow. Jack P. Guide suit. Yeah, so the guide is coming. Like in yeah. Did you have a hard time backtesting? I actually never really backtested Elliott waves. I just practiced on charts. I tried collecting data on Elliott waves back in the day, but I never really got into it because it like Elliott waves is already here for decades, almost a century. So it's such a proven method of analyzing the charts that I didn't really feel like analyzing stuff myself. I just built a lot of experience on the targets and the fib times and stuff, but you'll find most in resources across the internet. So I never really backtested it. I have a little bit of data, but not like, yeah, I pretty much canceled that. So, but I think if we talk about backtest, so I'm not sure. If you talk about backtesting as in trading Elliott waves, then the main question is the range corrective or possibly impulsive? That's the only question you want to answer if you talk about ranges. And the other thing, so there's two main setups that I really enjoy, right? First of all, is the range corrective or impulsive, right? If the range is higher probability corrective, which I identified here with my video on Friday the 16th, probabilities are high to take the high, you'll see me going long. On the other hand, I love setups like these. I got to go to a 15 because I longed here as well. That if price comes down and we had some support and it comes down impulsively, I enjoy waiting for the 4-5s to form, right? Preferably on top of an area of support. And then I enjoy longing against the impulse. So in the other direction, that move, right? And this is quite literally, was it this one? No, not this playlist. Was it this one? No, not that one. What I say here. And I even at the beginning of this video, I also say like that information there is the foundation of the way I enjoy trading. So yeah. What's up, BTC Bulls? JB, welcome. Not sure what you mean here, Jouke. If it's is there no chance of a WXY you can have internally a running flat, right? Wave W can be a flat, wave Y can be a flat. Can you explain why the theory says there can only be one wave that is extended, therefore have another wave 1 to 5 in it? Oh, yeah, okay, I see. So in the theory, you can have a maximum, by the way, of 2 extended waves as long as one is not extended. But if you have an extended wave 3, 1, 2, 3, 4, 5, in most of the theory and of course the books, what you will see is that the extended wave internally, what they show, has a 5-wave structure. And they don't always show it in your 5 and your 1. And that is because in an extended wave, the structures, the wave 2 and the wave 4, right, as well as your 1 and your 5 and your 3, but especially the ranges, they might be quite similar in size to the higher degree in your extension, or maybe a little bit shorter preferred, but can be quite similar. And in the extension, they show the additional count. In wave 1, you also have 5 waves. In wave 5, you also have 5 waves. It's fractal in nature, Elliott waves. Each impulse has 5 waves in 5, 5 waves in 3, 5 waves in 1. And you go all the way down to the lowest time frame, you'll find exactly the same. You go to the highest time frame, it's the same. So if this is a weekly time frame impulse, you'll be able to see a daily time frame lower degree impulse. And in the daily impulse, you can see a 4-hour time frame impulse in here, and then a 1, and etc. You can't have 5 impulsive wave. I mean, 1, 2, 3, 4, 5. An impulse is a 5-wave structure, right? And then it's done. You expect a retracement after. But inside, right? So we're talking degrees now. So this is your 1, 2, 3, 4, 5. Inside wave 3, you have another 5 waves. Inside wave 4, you have a corrective structure, a 3-wave. Inside wave 5, you have another 5-wave structure. Right? So I think the confusion might be Elliott wave degrees, because it's fractal in nature. Like, for example, this being a wave C on an ABC, no, maybe like 1 hour time frame, but if you go to the lower time frame, 1, 2, 3, 4, 5, it's an impulse on the lower. Right? So I think the confusion is degrees. Yeah, I was already afraid this would happen. Of course, all the alts. I mean, with yeah, I don't want to go through all the alts. Like, when is the, not that one. XRP was only 2 weeks ago, which very unlikely changed because the analysis was a weekly time frame. So I'm pretty sure XRP did not change because I don't analyze the lower time frames. On Cardano, do I have a video on Cardano? Solana? No, that's not Cardano. I actually didn't make a video about that, but yeah, XRP didn't change. It's exactly the same. And yeah, I don't want to waste my time here with this stuff. I mean, we touch resistance. And it looks like a corrective structure. So one would expect the high to be taken at a later stage. 3, move back up, took the high, you just continue ranging. So, but it's about corrective or impulsive. This by itself looks like a pretty much like a 3, but yeah. So that's that. There's no need to analyze this in detail. Didn't touch the 886. But yeah, higher probabilities, corrective. Voila. Yo, Daywald. I often refer my community to your channel, one of the most neutral Elliott Wave accounts out there. Yo, cheers, Daywald. Yeah, sometimes people say, "Yeah, I came here through Daywald." What's up? Good to have you here. Daywald, by the way, everyone, he's an Elliott Wave analyst as well with his own YouTube channel. What are you at now? Like, and Daywald, funny inside story, used to be go-to channel, used to be part of the Koens Gold membership, where learning Elliott Waves, and now he has his own channel doing very well. 6.15k subbies. You do realize it's going quicker and quicker, so the 10k is inside, not 10k is inside. So Daywald is often live. I think you're more active on live streams than anything else nowadays, no? So nice. This is Daywald, Mr. Daywald. Great guy, very down to earth. You know, if you like Elliott Waves, you may like his channel as well. Good to have you here, man. Thanks for popping in. On the 2 hour, I see an M pattern. I see it as a wave C down. An M pattern on the 2 hour time frame. You mean like this? Is this? I don't do anything with patterns. This is the M, right? Because this would be of course a W, no? On the 2 hour. Yeah. I'm not. I don't really use. I see it as a C down. I mean, yeah. Of course, Elliott Waves is related to patterns. In a way, I mean, the pattern is just an Elliott Wave structure, and the leg of your last, like the final leg of the M, yeah, can absolutely be a impulsive structure. For example, a wave C. Yeah. So yeah, 100%. We. Okay, so now we wait and see what we get. How far did we retrace? Like a 382, 0.5, 0.5. The 0.5 would be a minimum target for a 2. So, you know, as mentioned in the analysis, you'd be still looking for price to eventually take those lows at some point. If you do take the lows, then one of the scenarios that should be considered would be, hey, could this be in 1, in a 2, and a 3 down, 4, 5, for then a bigger C, A, B, and a bigger C to the downside, right? That is going to be your most bearish option. Alternatively, you have the options where you create your bounce and move back inside the range. But that is where patience come in, because if you do drop and you take out the lows, you just got to wait. As long as price is moving, just like over here, as long as it moves and it's not creating a bounce or another range, there's nothing to do. There's nothing to, if you're not part of it, just wait for another range to form is always the best thing. And then you know what's up, right? The ranges give all the information. Yeah. The 8-8. I mean, the 8-8, 8-8-6, they seem, of course, very, very close to one another. So, yeah, the 8-8-6 is, however, related to Fibonacci because it is the wortel, the carrot, I don't know the English word, of, I believe, the 7-8-6. This, I think if you do the 7-8-6, I think you'll get as a result the 8-8-6. I gotta say that the calculator on an Android phone is so much better than the calculator on an iPhone. From my experience, I don't know. It's just easier. Okay, so if I do this is the first time I'm doing this on this phone here. I have no idea. I want to take the wortel, that one, but that's the third. Anyway, yeah, in the square root. Thank you. Yeah, in the Netherlands we call it wortel, and wortel literally translated in the Netherlands, you can eat it. The wortel is a carrot. So I was like, I'm just you know, trying my luck here because I forgot the term. Yeah, but what I struggle with the calculator is that if I'm on my like basic window, no, and I do a calculation, right? I now like, for example, I want to write something in front of the 10. I can't like tap it and then type in front of the 10. If I want to use the 10 because I want to divide something by whatever the calculation is, by 10 in this case, I can't tap. And if I want to put brackets on Android, it's super easy to put to click on a bracket, right? And I can put a bracket anywhere on Android, anywhere. But here I'm like, yeah, but how can I just have like start a bracket? It always, yeah, I don't know. It's just not as, in my opinion, or I just haven't figured it out. But I don't know. I don't enjoy the calculator on the iPhone. Am I gonna start an Android versus iPhone? This guy, I use both, so. In both directions. That matter the most. The ones that are forming while at support or at resistance. Now, the lower time frame CVD always has priority over the higher time frame. So on a high time frame CVD, you may see a bullish CVD here. But if it's bearish locally, this has higher probabilities always. Not the bullish one, it's the bearish one, right? I don't know if we have actually. What's going on here? So we do have a bearish CVD, right? Which now played out because price took the low here. But this is on a 30-minute time frame, okay? Wait, this is the old chart. This is not correct. I don't recognize it. Okay, there we go. So here you have a bullish CVD now, right? So you may think, wait, this is the most local one. Okay, well, it is the most local one. But what do you want to see before you want to trade a bullish CVD? You want price to stop dumping, no? So this is context. Price moves down on a high amount of volume locally, big red candle. There's no way this is like interesting, right? For the bullish CVD to be interesting, what we want to see is price stabilizing, okay? Create some local higher highs, higher lows, and then preferably on like a 3-minute time frame here, we start to build bullish CVDs. Not interested in this one. But once we touch support over here, right? We touch support on the chart. Let me put this on the chart here. Right, so price touching support, right? Price, dump, 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 dump. We start to move sideways. Interesting, no? And then as price is here moving to the upside, you get small bullish CVDs. And that is interesting, right? That's the context as well. You use CVD, of course, in confluence with other tools. Now then you had this CVD as well, bullish on top of support. Price here, of course, moves up. So initially also here, price comes down very quickly. I'm not interested in sniping a low, even though there's a bullish CVD at support. So I would prefer to be like, okay, I'll just wait for a bounce, right? Wait for the bounce. Okay, and then here, if I zoom in, bullish CVD. Higher low, lower low, cool, nice. And then we continue. And then the bullish CVDs keep forming as price moves up. That's what you like to see. So you got to be a little bit patient in that case. Right? If price moves very actively or very, very fast, volatile in one direction, just wait for price to stabilize. Yeah, so at the moment, yeah, bullish CVD here, not interesting at all. If price is going to, bounce and then on a 3-minute time frame, higher high, higher low, higher high, higher low, and we have multiple bullish CVDs, interesting. You want the structure to be supported by CVD. But structure always comes first. Rodney, welcome. Divinehood, how you doing, man? Yeah, Divinehood, everyone also has a YouTube channel where he covers some Elliott Wave analysis. How are you doing now at the moment? Go to the channel. Wait. Is this a different Divinehood? Where's the YouTube? Where's the Elliott Waves? Pranking my friend 6 years ago. Mega random video expecting technical analysis. Maybe a different account. But anyway, that's not an Elliott Wave channel. But he does have one. Oh, I see. It's Divinehood Trading. Okay. I tend to click on the name in chat. Okay. Yeah, anyway, Divinehood Trading does Elliott Wave analysis as well and some other stuff. Have you seen OM again since I made a video? Well, occasionally. So not too much. Where's the OM? So I mean, still at support. The move is slowing down. You took out the low, which is as expected after a quick move, right? You're looking for a grind. It's the same on every time frame. You start with a grind in the beginning, quick move down. You wait for like price, low, grind, couple of 4 5s, and then eventually turn around. You have support here as well, being the range. Interesting to keep in mind. Definitely not like a coin that would be worth randomly longing or shorting. AVAX, 1, 2, 3, 4, 5. Oh wait, was this the WXY that I checked with Liquid Mafia? No. Wait. What were we talking about here with Liquid? Was it? I forgot. But yeah, bullet. This is higher probability impulse, right, to the upside. 1, 2, 3, 4, 5, maybe 5 if you can count a double 1, 2 somewhere, and then this is an impulse down, but let's see. We just missed out on the 886, but it's very deep still. So arguably, you would look at corrective structures. 1, 2, 3, 4, 5. If this would be the end, then this needs to be a 5. Can this be a 5? I don't know. I haven't checked the lower time frames. Only did the higher time frame. We are at support, of course. 618, 786. Still some more support down there, but what's this? ABC. Oh yeah, wave C went to the 2.618. Lower probabilities for A, B, and C to go all the way there. So higher probabilities. This is an impulse, which means impulse, correction, look for another impulse. I mean, that's basically the story there. So I guess that's why, like, that's the conclusion of my analysis that I did on AVAX when I did it. Vierkante wortel. What's up, Mohammed? Flip it, use more option. Okay, I gotta flip it. I gotta flip it. Hamburger menu and change to scientific. Yeah, I figured that one out, the scientific one. Mohammed, in a triangle. By the way, Metchi HK, welcome. Pretty much at the end, I suppose, but in a triangle, do we have to get a WXY wave? No, everything can be a simple zigzag. It's no requirement to have a WXY. Smoothie. Shake smoothie. Which tool are you using for CVD? AGGR. And then we coded it ourselves. It's in Discord. There's a new chart on Tradingview regarding alts. Total 3 ES. Holy. It's a problem with the higher time frame, like what you're gonna do here, right? Count this as a 1, 2, 3, 4, 5. Well, we took the high. Or just 1, 2, short in a 4, but 1, 2, 1, 2, 1, 2, 1, 2, 1, 1, 1, 2, 3, 4, 5, 4, 5, 4, 5, 4, 5, etc. Anyway. Yeah. $886 question. Yep. 886 touched. Probability is higher. You're not yet finished. Overlap here. Potential for 1, 2, 1, 2, 3, 4, 5, 4, 5. Finish the move when you touch the point of control of this range. Quite high, but confluence with the 886 maybe. Yep. That's quite neat. There's also a high volume level here at 825, by the way. So yeah, this would be a pocket. And reject. Well, pretty much. Hey, there he is. Liquid Mafia. Yeah, I remember Liquid. So everyone, Liquid Mafia. Wait, what time is it in Like you are here in Australia. I must be late, no? So Liquid Mafia is one of the absolute OGs on the channel. Very unique style of analysis, which you'll find in Discord with it's like Interstellar. It's like space with his FIP circles and everything. It's super cool. But we once had a chart that we were discussing. I don't know if it was in a live stream or in Discord, where we were considering a flat, but I forgot the coin, the alt coin. I can't remember. When I open the chart, I immediately think, wait, was this it? Like I have to think about you, but I'm not very sure about that. The alt I don't think it was the one I just did, but SUI made a video about it recently, so probably didn't change. was high time frame. Well, when the Rodney, the compendium planning to go out next month, July. That's like the goal. Always late. Yeah, time zones and stuff. No, time zones and stuff. Nice bound of the 618. Yeah, but it like like a little bit of a reaction, but you really want to change. Basically the highest volume is now in the low. You need price to go back up here. And for bullish CVDs to be interesting, you want price to move up, up, up. Bullish CVDs coming in as well. At the moment, of course, not very interesting. So, yeah. Oui. Could be ABC here as well. Now you're below the golden pocket. So, I mean, you basically, retested the golden pocket here. Touch the 886. Probability is much higher. You get a 3. Take the low. You got to move back. You got to change the local market structure if you want to attempt taking the highs and count this as another 2 and maybe a multi-1-2 in this case. Else it becomes a 3, and a 3 is bearish because you eventually expect the low to be taken. I mean, in general, as per the analysis, we're looking for the lows to be taken at some point anyway now. But, Was it the others chart? Oh, that might be the one. I forgot to... Oops. Yeah. Yeah. Question was, is this a 5 in or do you get a flat? Yeah, that's the one. Yeah, exactly. Because here we were like, well, you got your 1, 2, 1, 2, 3, 4, 5. Okay, nice. Big retracement here, right? Is that your 4? But then your 5 looks 3 wavy. So arguably ABC. And then we were in agreement that a flat is definitely an option here. Yeah, this is the one. It's the others chart. Yeah. So, yeah, that's the one. Liquid Mafia knows. He knows. Could be nice for a long. Yeah, absolutely. Right. I mean, you want to get the retracement at some point. No. 12 a.m. midnight. Yo, bedtime. Yo. I don't really. I see the alts, but you know, I'm not really looking to do like a lot of different alts. especially ones I never heard of. I'm not even gonna analyze. I'm just having a peek. Maybe I know something when I peek. Okay, not interesting. Forget about Portal, guys. This is the hopium type of like stuff. You're in a downtrend, right? There's no. You're at all-time lows. I don't count the wick. You're literally at all-time lows. Not interesting at the moment. So yeah, maybe this is an impulse. Yeah. A, B, C. Is it a C or is it an A? So what you want to wait for is what happened on SUI. Let me show you this. And it will take patience, and you're not going to snipe the low, but at least you're going to make a lot of money. This is what you're looking for. Now you have this, like, portal is basically maybe here, maybe it's here, maybe it's here, maybe it's here, maybe it's there. You know, you got to basically wait for a bit of a bigger move up, change the whole structure, and then try to look for the retracements. Yeah, you can, of course, you can trade the move up. But what I recommend with Portal or any other coin that looks the same is you first wait for a bit of a significant move. And that's, you miss out on this. But at least you're not first missing or losing 50% or more of your portfolio because it just keeps dumping. Right? So you first wait for a significant structure, and only then do you try to aim adding into the ranges, right? That's where you buy. Then eventually you get your quick move up. You look into 4/5s. That's eventually where you sell. And then your biggest bet is the next retracement. If you go far enough back on my channel, you'll see that as price was going down here, we analyzed it and we were looking for price to move up and take out the previous all-time high, which it not is anymore, of course. And these were the two areas of support we had on the channel. Or on SUI. And then, of course, that's like your refill zone, so to speak. But this is what you want to wait for. So what was it? Can I Control Z back to Portal? Can I? SUI, there we go. So this is Portal, but look, it's not looking great, eh? So I don't count the wick. This is all-time low for me. And at the moment, there is no life, right? Every bounce, this is the beginning of SUI basically, right? Like just goes down bit, and these bounces you have the same on SUI, right? They're not good. You really want to wait, and yeah, you might not snipe the low and be one of, like, you know, turn $1 into $1 million, but at least you'll be more safe. Unless you can lose $1. You might want to invest $1, but you know, you get the idea. From a trading perspective, not great. If you play with risk, not great. If you want to gamble, and this is completely gamble, like 100% just gamble, yeah, take a shot, but make sure it's money you can definitely lose, because there is no high probability upside at the moment. Because just like with SUI, what you're basically waiting for is a good big structure up, right? And of course, if that would happen, yeah, you're gonna miss out on 1,000%. At least you're not losing all the money you put in, right? So you gotta wait. You get the retracement or ranges. That is where you buy, and then you buy for the next leg up. That's a lot more safe, a lot more sensible. But then again, if you do, of course, everyone's different, and if you have gamble money, or like, you know, money you don't care about, then this would be the place to put it. And similar charts that look exactly the same, basically. Yeah. Because, yeah, you really want to wait for some more information. Too early. It's just risky. It's just, and yeah, in the end, like, you will never on this channel. So of course there's channels out there that look for the next 1000x coin and that sort of stuff. And they then tell people like, oh, this one looks amazing. This one can go 500,000x. And then it's one of those absolute random like things. And of course it can. And people want to get rich quick. That's usually the underlying problem. They don't want to put in the work and wait. They want to get rich quick and then generally burn their money because they buy the wrong stuff, or it goes bankrupt, or you get a Luna scenario, or risky. Yeah, trading is a risky business. Be careful. Sorry. Relax, bro. Not really a time, but extension. If you pass the 1.618 after an 886 is touched, you want to start forgetting about the 886. So you have your move up, move down, 886 touch. If this move up goes to a 1.618 extension taken from start and end, that's the moment where you're gonna be like, okay, whatever. Because the 1.618 is the moment you got to start thinking about threes, the moment you pass it. So if you pass the 1.618, you're going to think about an impulse, most likely, instead of an ABC. It'll fly. And that's the moment you want to not really care about the 886 or what we had at the low at 74. Right, you move up, touch the 886. Oops, up, 886, up again. But then this next structure is a 3-wave corrective move, not a 5-wave. Then you're going to look for price to take the high. That's your trading bias. So that's the moment you'll be like, well, we touched the 886, but this is corrective. So initially you're going to be looking for the high, not the low. And that's where slowly probabilities start to change. Yep. Oh. Mm-hmm. Okay, guys, like online for 1 hour, 35 minutes. I'm not planning, I said 1 hour, so I'm not going to look at all the alls and stuff. I know there's always a lot of requests and I can be very quick, but yeah, it's time for me to wrap things up. So a lot less active. Okay, you still publish on TradingView. I don't really look at the publishing too often. But hopefully you're good, Liquid Mafia. Taking it easy. That's nice. Doesn't mean they're making new highs around the corner. Generally, after an 886 touch, you don't see the other side taken. So if you go to move up, move down, 886 touch, you generally get a bit of a retracement and then you go up. Most often, or it's uncommon for price to move all the way down to this low. Just as it's uncommon to just continue without any reaction whatsoever. Does the same kind of guidance apply for ASIC for the short trade? I don't trade the 886, but you can trade the retracement of the 886, of course, because the 886 is not a great entry. So if there's a retracement, it's an opportunity, but otherwise less interesting because your entry is so bad. And generally, if the 886 plays out and you take the high, stop loss break even or something, But yeah, it's better to wait for the retracement after an 886 if you get it, and then potentially look at like a golden pocket or an 05 or something. Say hello to the wife. Would you long here? No. I was already in a long, because the remainder got stopped at break even, so I'm not in a long anymore. But absolutely not. The only reason I longed is because probabilities were higher. This is corrective. This had diagonal probabilities, looking for price to take the high. That was the reason for the long. And that has played out. Price took out that high. Cool. And now we go back down. No worries. Stop loss break even, not caring. And yeah. Definitely not interested in anything else here at the moment. So yeah. unless it's a short. Because, of course, this move up is now soon going to be a three-wave, pretty much confirmed three-wave structure. And if you touch the 886 here, oh, you can still have like the WXY or bigger sideways, but eventually you expect the low to be taken. But yeah, I don't want to trade too much in a day and stuff, and I mean, I'm happy. So, no. But that being said, the analysis started in this live stream at the very beginning, around 6 minutes in or something. So make sure to check it out. And in that particular analysis, we explained that the probabilities are higher for price to, at some point, take out the lows. As per the scenarios, look for a zigzag. At the moment, looks very sensible. So something I'll keep an eye on. And yeah, nice. Ranging environments. I personally really enjoy ranging environments. And yeah, we see. So anyway, the analysis was done earlier, right? Expecting a range, take out those lows at some point. But as per the analysis, you'll get all the information. And I'd like to thank you for being here. Wait, I see one question. 105K, there is support there. But again, you got to have a plan. Yeah, everyone has a plan. I'm interested, but not, I got to wait what price does if it gets there. Italian Dutch, I'm not a financial advisor. You need a plan where to take profit and a stop loss before entering. That being said, thanks for being here. And I will see you at the next one.